Costco beat sales and revenue expectations in its latest quarter. Digital sales, e-commerce, they were up more than 20%. Let's get more from Oliver Chen, Managing Director and Senior Equity Research Analyst at TD Cowen. Oliver, thanks very much for joining us. What was important, do you think, in this latest quarterly report from Costco?
We continue to be really excited about what Costco is doing, in part because they're executing the exceptional value, and that's what customers are looking for. The comp store sales were 6.4%. Also, they had solid renewal rates above 92%. So customers are happy and they're coming to Costco, and it's been a very consistent retailer. It's the club model. So the business model is highly focused on offering members the best value possible, and they're very much outperforming the retail sector. As we zoom out in retail, Andrew, traffic is down about 2 to 3%, and retailers are struggling to make comp store sales of positive 2 to 4. Costco's been consistently above 5% comp store sales, in part because this business model is so diversified, so robust, and you have needs in grocery plus diamonds. You have chicken plus diamonds. So you're getting discretionary and you're getting a fabulous grocery business. Everybody likes the Kirkland brand as well. Consumers like private label, and Costco's private label is very trusted. So overall, very impressive. As we look forward, technology is a big deal. More personalization, leveraging the loyalty program, the marketplace model, digital advertising. Those are all things on the horizon, but this company will always be committed to customers and employees first. And it's a real champion of value, and that matters too.
Nevertheless, though, the stock down in the past year. Why is that?
Well, the stock is expensive. We think it's expensive, but worth it. It's trading at above 40 times PE. You contrast that to other retailers on the sector average, which is closer to 15 to 20 times. So it's an expensive stock. So expectations have been very high, and there's been some rotation into riskier ideas. We like Costco alongside Walmart as well. And another stock we like is Ulta too. But expensive, but worth it. And investors have been looking for bargains. This is a retailer that's executed well for many years. That's in part why we like it, because the winners keeping on winning and scale matters. And also being a wholesale model is quite unique, because what drives this model is renewal rates and a more constant income stream in terms of the membership fee that you pay.
I'm just looking, I'm not sure we can put up a comparative chart of Walmart, WMT, and Costco, COST, because it's really fascinating. A 5-year comparative chart shows that Costco has been a superstar. It's beaten the S&P 500, no doubt. But it's been weak lately, and Walmart has actually caught up with it over 5 years.
Yeah, well, the Walmart story has been evolved in terms of Walmart having the everyday low price core grocery business, which is about 60% of revenues being food, and then also bolting on a lot of great technology and being a real competitive force relative to Amazon. Walmart also has a jewel of the business called Sam's Club, which is the wholesale competitor to Costco. But Costco's been a leader in terms of private label development, very, very happy customers, and traffic that's almost too high, and productivity levels that are extremely high, just given how much customers like Costco. Costco's also had many, many years of consistency with comp store sales growth. We've seen a little more volatility with Walmart in the past, and also an evolving Walmart. That being said, we publish Walmart as our best idea, and it's been a stock we've recommended for a few years, in part because of AI, in part because of the marketplace, but also grocery is very hard and low margin.
It's interesting. You do note that the renewal rates for the subscriptions at Costco down. But that's partly, they say, or I'm not sure if this is you or the company, because a lot of the signups have been digital and they may be less sticky.
Yeah, that's true. A true statement. So you're balancing that. The in-store signups are stickier. Some of the programs they have where they're having members sign up online, those have been less sticky in terms of the renewal rate mixes. Overall, though, I would still advertise your membership online as well and accept that trade-off. because those are great customers to have and younger customers, but it's part of the math of that mix. So we'll see some pressure and softness there. It's something to watch, but having a 92% plus renewal rate is a great absolute level.
That's interesting. I mean, our market, about 13% of their stores are in Canada. So obviously they find Canada a relatively friendly country.
Yeah, Costco's been a great international story. China, Asia, Europe, Iceland, France, 921 units. But a lot of what Costco does is globally appealing in terms of the fixed margin on the prices. You know you're getting the best bargain there. Furthermore, Costco is very curated. As you think about the future of retail, it's simplify to amplify, but they only have about 4,000 SKUs. So when Andrew's looking for a computer or a vacuum, it's a trusted source, meaning you're not seeing 20 ideas, you're seeing the best of a few. Having a lean choice count has been important with the real volatility of supply chains that we've seen and tariffs. And Costco's been able to manage that pretty tightly. The other thing about Costco is they pay their employees well. Retail's a tough place. It's not like media or your job or my job. Retail is not an easy business, and treating their employees well means employees treat customers well. That matters too, as this company has low turnover, and it matters for the member experience. The other thing, maybe this isn't even a retailer because most of their profits are from the membership fees. So thinking about that too from another lens is part of why the valuation is high, because of the stickiness of the membership fee in some comparison to like technology and software companies versus a traditional retailer, which is trying to manage merchandise margins with a little more variability, high-low pricing strategies.
That's interesting. Yeah, you go into a place to buy, say, a vacuum cleaner, and you're just deluged. And some people tend to just not buy anything. Yeah, I prefer that. Just give me one or two choices, and I'm out of there. Yeah. Thank you very much indeed. Really appreciate it.
Happy holidays. Go shopping at Costco. Buy the best chicken, buy the jewelry. I buy the clothes too. It's a one-stop shop and it's curated. Happy holidays.
Thanks. Yeah, it's just the crowds, the lineups on that parking lot. That's what deters me. Oliver, thanks very much. Oliver Chen, Managing Director and Senior Equity Research Analyst at TD Cowen.